Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 4th of January the 1st to Friday the 8th of January the 1st of 2021. Now I've written the weekly up so we can get on with it. So let's have a look. Over the week then, from Monday the 4th to Friday the 8th, the week we've just had, the euro dollar was minus 23, which means that the euro dollar as an FX pair lost 23 points or pips. Euro yen plus 83, euro pound plus 44, pound dollar minus 80, pound yen plus 20, and dollar yen plus 80. And if we look at the bracketed flows, we've got an interesting situation in that we've got some symmetry in the numbers that's giving us this situation. So we've got the dollar at plus 183, the euro at plus 104, and then we've got like the mirror on the negative side, the pound at minus 104 and the yen at minus 183. So this gives us a sort of a joint situation for drivers, etc. So if you look at it one way, if you say the yen was negatively driving in an opposed manner and it was opposed by the pound, then you've got positive opposing flows going primarily into the dollar at 183 and the euro at plus 104. Or you can look at it the other way around and say that the dollar was the opposed positive driver at plus 183, opposed by the euro at plus 104, and you've got opposing negative flows, which are both at front and back door, going primarily out of the yen and out of the pound. And that was an activity of 287. So that means that the complexes from a positive or negative sense moved 287 points or pips during that period, the week. So we're going to basically, so what did we get there? Just to sum up that, is we had dollar strength, yen weakness, and then we had a balance of pound weakness and euro strength during the week. Now I'm going to write up the daily flows, and so see you in a minute. Welcome back, you made it. I've written up the dailies, so let's make a start then. So Monday the 4th, we've got the unopposed negative driver in the pound at minus 227. So you've got no backdoor flows, but you've got front door flows going fairly evenly, looking at the situation. So we've got the euro plus 81, the yen plus 74, and the dollar plus 72. And that was an activity of 227. So on Monday, nobody liked the pound weakness, and then Tuesday, we'll rattle through these and then we'll talk about them. Tuesday, then you've got a different situation but similar. You've got the dollar as the unopposed negative driver at minus 143, and then you've got joint situation here, but primarily the bulk of the opposing flows went into the pound, and then you've got joint euro and yen as the rock and the mover, positive movers at plus 37. So, and that was an activity of plus minus 143. Wednesday then, Wednesday we've got a more balanced situation. We've got in terms of opposing flows, we've got positive opposed driver in the euro at plus 141, opposed by the rock, which is the dollar, and we've got front and back door flows this time going primarily out of the yen and a little bit out of the pound. Right, so, and that was an activity of plus or minus 160. Thursday we've got a positive opposed positive driver in the dollar, with the yen getting the bulk of the opposing negative flows at -171. And Friday, the last trading day, which was yesterday, we've got the euro coming off as the negative opposed driver at -128, and then you've got the opposing flows going equally pretty much into the pound and the dollar, and that was activity 131. Right, so if you remember the weekly flows over in total then, so weekly wise, we had this situation of dollar strength pretty much matched by yen weakness over the week. So that, and then you had pound, so you had pound, let's just write this somewhere, so you had dollar, so you had dollar strength, yen weakness in terms of drivers, and then you had pound weakness and euro strength. But that doesn't tell you the whole story, but as we're going to talk about now. So let's get rid of that. Right, so we had a lot of swinging around this week. We had non-farm payrolls. There was a fair bit of aggro in America in terms of the Senate building, etc. We had the Democrats in America now talking about passing a large stimulus bill, etc. So and then we had increasing problems with the virus, the COVID virus. So that's the backdrop of it. So Monday then, so the pound was sort of like the pound was weak over the actual week, and on Monday it was shunned. But the interesting thing was, if you look at the equities, the equity market was well and truly pumped. Now early on, Monday and Tuesday, it didn't look like that was going to happen. Although if you look at the daily briefings, we did suggest that the yen was going to weaken on the Wednesday, I believe. So and this was going to be a risk-on situation, and we suggested buy dollar yen on the Wednesday. I believe it was the Wednesday. So anyway, that panned out very nicely. And then we started to get signs of the euro complex topping out. We started to get intra-week flows where the euro was the unopposed positive driver, excuse me, which normally means either a top or a continuous ramp up. Now, we suggested that it was more likely a top, and then on an intra-week basis, the euro went from the unopposed positive driver to the opposed positive driver, and then yesterday it was the negative opposed driver, and so it pretty much was a peak in the euro complex. Now, which arguably we got fairly right on the modelling. So we were suggested on the Friday selling euro dollar and talked about euro yen. We've been selling euro yen for a while, but obviously hedged. But the euro yen has been coming up. And now it finally got the message and started to come down. Right, so that's the sort of backdrop of it. Gold started the week reasonably strong, and then we suggested, given the equity pump on Wednesday, gold had nowhere to go really, and you're also getting dollar strength through the week, sort of background dollar strength, and gold does not like background dollar strength. So the oil market was coming up, so you had this sort of situation, and it sort of looked like a sort of a fairly standard risk on commodity currencies coming up, with gold coming off equities coming up, etc. So that's what it sort of looked like, but it was far more complicated than that, as you know, if you were trying to trade the week. So really, just to sum up then, over the week then we had dollar strength, much against the analysts. You know, the general sentiment and negative noise on the dollar is quite strong. Everybody's saying sell the rallies and all the rest of it, but the dollar nevertheless came up. The yen, via the equity transmission, was pushed down quite significantly later in the week from about Wednesday. The pound was mixed. It was, as usual, it was being knocked about all over the place. And has ended up on the up at the end of the week. And the euro, we started to see, remember I was saying over the last 3 or 4 weeks that the data out of Germany has been outsized. It's been positive, very positive. And we started to see this week a tapering off of this outsize, and actually saw a few data points of weak German data. The trade balance was a particular one. Now the trade balance is important for Germany, so we started to see this like roll off in German data, and this coincided with this peak in the euro complex, where it went from the unopposed positive driver on an intra-week basis to the opposed positive driver on intra-week. And finally yesterday they gave up the ghost and started selling the euro complex off, and it was the opposed negative driver. Now Monday we're going to talk about where we think we're going to go, but I hope that was useful to you. I hope you had a good week. See you Monday. Thank you very much.